They didn't just buy it, they confiscated it. If you're looking at the silver price on your screen and thinking you still have time, you are wrong. While you were sleeping, the United States government signed a secret $2.5 billion order that effectively nationalized the COMEX. The inventory is gone, the price is fake, and the window to protect your wealth just slammed shut. It is Monday, January 19th, 2026, and the free market is officially dead. Ladies and gentlemen, welcome back to Veiled Wealth. You're probably looking at your screen right now. You're seeing the paper price of silver hovering around $93. You're seeing the price in Shanghai trading at an absolute premium of $105.73. And you're probably thinking that that is the story. You are wrong. That is just the background noise. That is just the symptom of a broken market. The real story, the one that nobody in the mainstream financial media is talking about because they are too terrified to admit what it means, is that a new player has just entered the chat. For years, we tracked the whales. We tracked JP Morgan. We tracked the CCP. We thought we knew who the biggest buyers were. But as of this morning, all of them have been demoted. A new Leviathan has just surfaced, and it has a printing press that can print infinity. We are talking about the United States government. We have just received confirmation of a massive, unprecedented policy shift coming out of Washington, D.C. Buried inside the latest Defense Appropriations language is a directive that should send a shiver down the spine of every short seller on Wall Street. The United States government has officially approved a $2.5 billion acquisition program specifically targeted at critical minerals to replenish the strategic national stockpile. And guess what is at the very top of that list? Silver. I need you to let that number sink in. $2.5 billion. Now, in the context of the national debt, maybe that sounds like small change to you. Maybe you're thinking, oh, they print $1 trillion a week. What is $2 billion? You're missing the scale of the physical silver market. The entire annual production of investment-grade silver is tiny. At current prices, $2.5 billion represents a massive percentage of all the available silver sitting in the registered vaults of the COMEX. But it is not just the money, it is the mandate. When a hedge fund buys silver, they are price sensitive. If the price goes too high, they stop buying. They have a budget, they have risk controls. But when the United States government buys silver for national security, price is irrelevant. They do not care if it is $90. They do not care if it is $150. They do not care if it is $500. They have a mandate to secure the metal because without it, their missiles do not fly. Without it, their satellites go dark. Without it, the entire green energy transition that they have bet their political survival on collapses into dust. This is the moment we have been warning you about for 5 years. We told you that eventually, silver would stop being treated as a speculative asset and start being treated as a strategic imperative. We told you that eventually the government would realize that they are naked, and that realization happened today. Think about the timing. Why now? Why on January 19th, 2026? Because they have seen the same data we have. They have seen the inventory reports. They know that the United States is dangerously dependent on imports. We import roughly 6,400 tons of silver every single year just to keep the lights on. We rely on Mexico, we rely on Peru, we rely on supply chains that are breaking down in real time. And with the geopolitical tensions exploding, the strategists in the Pentagon have realized that they are vulnerable. So they are entering the market, but they are not entering a healthy market full of supply. They are entering a market that is already in the terminal phase of a shortage. This $2.5 billion buy program is effectively a giant vacuum cleaner that is being turned on inside the COMEX vaults. It is going to compete directly with Apple. It is going to compete directly with Tesla. And it is going to compete directly with you. This is why I call it the new whale. But this whale is different. This whale makes the rules. And the scariest part is that this announcement creates a self-fulfilling prophecy. The moment the industrial users see that the US government is panic buying, they are going to panic buy too. They cannot afford to wait. If Apple thinks that the Department of Defense is going to corner the silver market, Apple is going to try to front-run the Department of Defense. We are looking at a bidding war between the most powerful entities on planet Earth. And the prize is a tiny, shrinking pile of metal that is rapidly disappearing. You have to understand the psychology of this shift. For decades, the US government sold off its silver. They dumped their strategic stockpiles because they believed in the just-in-time global economy. Today marks the official end of that philosophy. Today marks the beginning of the just-in-case economy. They are acknowledging that the free market has failed to secure the necessary resources for national survival, so they are intervening. And when the government intervenes in a commodity market, they don't do it gently. They do it with the grace of a bulldozer. But to understand just how desperate this situation is, you have to look at the data that came out on Friday. We need to talk about the COMEX death math. According to the official data, total deliveries for the January contract have hit 41.44 million ounces in a non-delivery month. That is not a cleanup. That is a run on the bank. And who is taking the metal? J.P. Morgan. Out of 345 delivery notices issued on Friday, J.P. Morgan stopped 340 of them. That is a 98.5% capture rate. J.P. Morgan didn't just participate in the market. They were the market. They stood there like a goalkeeper and caught every single ball. Why is JPM doing this? Because they know about the government buy program. They are front-running the government. They are draining the COMEX dry before Uncle Sam's check clears. Registered inventory is down to 120 million ounces. We just burned 41 million in January. By March, the demand is pointing to 300 million ounces. 80 million available. 300 million demanded. That is a default. That is a mathematical certainty. And what happens when the vault hits zero? Force majeure. They will declare they cannot deliver. They will force you to accept a cash settlement. They will write you a check for $93 while the real price of silver on the street is $200. You will be cashed out at a loss. And while New York is playing this dangerous game, there is another player who has already decided to flip the table over. We need to talk about Shanghai. While the COMEX is trying to suppress the price, China has lost control. The Shanghai price ripped higher to $105. This creates the arbitrage vacuum. Right now, you can buy a paper contract in New York for $93, but you can sell that same physical ounce in Shanghai for $105. That is a $12 spread, a risk-free profit. This acts like a giant magnet. Every single bar of silver is flowing east. New York is effectively becoming a discount store for the rest of the world. But there's one final piece to this puzzle. The little guy, you. If you think you can just wait and buy your coins next week, you need to hear this. We have the letter from APMEX, the largest online bullion dealer in the United States. Ken Lewis, the CEO, just sent a private memo to top clients admitting to a significant development at their private mint. Production capacity has collapsed by 50%. Demand has surged by 400%. So what did they do? They built a wall. As of this weekend, APMEX instituted a mandatory $500 order minimum. This is the velvet rope being put up in front of the lifeboat. If you are a small investor, you are locked out. They are prioritizing the whales because they don't have enough inventory to waste time on single ounces. This is the supply chain snapping. So here is the verdict. We have the COMEX draining at record speed. We have APMEX rationing metal. We have the Shanghai arbitrage sucking the vaults dry. And now we have the United States government entering the ring with $2.5 billion and a mandate to buy or die. The picture is not complicated. It is terrifyingly simple. We are watching a simultaneous supply shock and demand shock hitting a market that is already running on fumes. So what is your move on Monday morning? Do not look at the chart and wait for a pullback. Waiting for a pullback to $85 when the Shanghai price is $105 is insanity. It is like waiting for a discount on water while your house is on fire. The price on the screen is a lie. It is a trap designed to make you hesitate. It is designed to keep you on the sidelines while J.P. Morgan and the Department of Defense clean out the vault. If you can find physical metal, buy it. Pay the premium. Pay the shipping. Pay whatever they ask because the premium you pay today is the cost of admission to the lifeboat. We are witnessing the end of the paper era. We are witnessing the death of the illusion that you can print wealth. The United States government knows it. That is why they are buying. The Chinese know it. That is why they are hoarding. The only person who doesn't know it is the guy watching CNBC who thinks silver is just a volatile rock. Do not be that guy. This is your final warning for the month of January. The 41 million ounce drain was the gunshot. The government buy program is the bomb. The explosion is here. The window is closed. If you are in, you are in. If you're out, God help you. This is veiled wealth. The whale has arrived. The vault is empty.